Your game is to hold on to your goddamn tokens from 3%, $3 trillion to $100 trillion. That's the game number one. That's not trading around it. That is not using leverage to try and juice extra returns. As for an asset class that produces la-la land returns anyway, you don't need leverage. You just need time. You need patience. You need to expect 35% drawdowns in bull markets many times and not be phased. You need to expect once every 4 years, a down 70 or down 80% market, you'll feel terrible. But 3 years later, you'll be at all-time highs and accelerating through them, and your wealth will be compounded.
Raoul Pal begins by asserting the importance of a steadfast approach in crypto investing. According to him, the primary objective is simple: hold onto your tokens through the market's fluctuations. From an estimated $3 trillion market capitalization today to a potential $100 trillion in the future, the key is patience. Pal cautions against the temptation of leveraging assets to enhance returns, as the crypto market inherently provides substantial gains over time without the added risk of leverage. He acknowledges the severe market drawdowns, including 35% drops during bull markets and 70 to 80% declines every 4 years. While these downturns can be psychologically taxing, history has shown that the market not only recovers but often surges to new all-time highs, rewarding patient investors.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The other thing is, once you're in this space, you start to see other people making more money than you. You see them making 100x on a meme coin or 1000x. They start showing their P&Ls on Twitter, and you start to feel like you're just not getting it right. You know, you're holding in Bitcoin, Ethereum, and Solana has only gone up 250% in the last year, and it's just not good enough. You've got to stop thoughts like that. That FOMO will force you to buy stuff you shouldn't buy. You will go too far out of the risk curve, and you will end up caught as the tide goes out, and you will lose the money. And if you lose your money, you lose the ability to participate in the mega trend. Rule number one: don't lose control of your tokens. And that brings you into, okay, so how do I asset allocate? It's complicated. There's so many cryptos. Well, if you just want to keep it simple, stupid, just buy Bitcoin, go to the beach and don't do anything. It'll outperform any business that you ever create in terms of annual performance. I mean, that's a horrible thought that I've realized. But at 150% performance, even if it comes down to 50% a year, most businesses don't grow at 50% a year. So it becomes very difficult to even justify starting a business, which is a bit weird. But really, how I prefer to see this space is it's a broader adoption than just Bitcoin. Bitcoin is one of the big use cases, but it's not all of the use cases. And so I would just take the three most prominent coins of the moment, which is Bitcoin, which is, let's call it the pristine collateral, the security, the safest asset. I would take Ethereum, which is the broadest, deepest asset. And I would take Solana, which is the new fast entrant that is rapidly gaining massive adoption effects. Hold those with 80 or 90% of your portfolio and do nothing. You just don't need to do anything. Then there is that inner degen inside of you, that part that wants to trade other stuff, that wants to trade in memes. Well, do that with the 10% of your portfolio. I pretty much guarantee, because I've tried this a couple of cycles now, that bag of investments is usually worth about zero at the end of it. You've had a lot of fun, but you've lost all of the money in it. But you'll be more than offset by your major allocation. So it's things like this that are really, really important. Is don't use leverage, because leverage means when the price goes against you, you lose your tokens. Don't buy stupid shit. Don't go too far out the risk curve with too much, because if that token doesn't work, you've lost control of your money and your ability to participate in the big trade. Don't FOMO into stuff because you don't understand it either. You don't know, you don't have an edge, don't pretend you do just because your mate told you. You know, the reality is that every time a friend of mine tells me to buy some meme coin, and I'm at a weak moment, maybe I'm tired, maybe I'm hungover, and I buy it, it usually goes down 80% almost immediately. So don't trust your friends either on their tips, because they're not very useful for that. But these are really the important things. The other thing is, how else do you lose your token? A lot of people look for yield. And I don't have a problem per se with yield. I've never been a yield guy. I'm a macro guy. I'm a price guy. But yield, if you're putting your tokens in control of somebody else to generate returns and you don't know where the returns come from, it probably works for a period of time, and then at some point it may well blow up. And then you've broken rule number one. You've lost control of your tokens. So you need to be really careful with leverage. The other thing is, this is a bearer asset. What a bearer asset means is you need to take control of it yourself. Now, you can keep it on an exchange, and I think the big exchanges, the very big global exchanges, are relatively secure. But the beauty of this asset is you can be outside of the system by storing it yourself. And that is storing it yourself on something like a ledger device. Doing that gives you the maximum flexibility. Yes, it can be a bit terrifying, but the key is not letting somebody else take control of your coins. Again, you'll be so upset if you don't have your tokens and you lose them because you got hacked, because you were storing them on your MetaMask wallet and you went to a website to buy some stupid meme coin and it was a scam. You've got to be really careful. This wallet cleanliness, separating your assets, using a different wallet to operate in the Web3 world versus a different wallet where you store things safely. Do these things and you will increase your probability of not fucking up. We will all get something wrong somewhere, so don't worry about that. But this is my kind of recipe for the highest probability of success, where I can bring as many people along on the ride as possible. And that would make me very happy indeed.
Raoul extends his discussion to broader economic implications, particularly the rise of artificial intelligence, AI, and its transformative impact on financial markets and business models. He predicts that AI will lead to unprecedented productivity and asset price growth, creating new opportunities for wealth accumulation. However, this technological evolution also presents challenges, such as the potential redundancy of traditional investment strategies and business models. Raoul introduces the concept of the economic singularity, a future where AI-driven efficiency could disrupt existing financial systems and redefine the very nature of wealth generation.
So then we've got output from the AI and the robots, and energy costs going like this. And what happens is you get this economic growth that goes wild. We don't know who it accrues to, but then once you start putting in this super intelligence, well, what does it mean for financial markets? How do you invest in anything when something is a smarter investor? It can see the patterns we can't see. It knows everything. Well, that kind of changes the game for us as investors. How do we generate and accrue wealth? We've done it via owning assets. Sure, physical assets like real estate, they won't be driven by the AI and the robots, but the financial assets that we trade on screens all day, well, that game becomes different. But also building a business becomes phenomenally difficult. Think of the world driven by software is eating the world, the famous Mark Andreessen quote. Well, software, this SaaS business model that we've all grown up with that's generated so much profit, now I can just show an incredible platform like Real Vision and show it to a superpowered AI and say, build me this, and it can build it in 3 minutes. So what is the moat to any product? Yes, it's community and it's humans, but outside of that, any business becomes a factor of attention. How long can that business get an attention before a new business comes along? It feels like the initial coin offering, ICO market of 2017, or even the meme market now. Velocity of capital becomes super high. The wealth creation destruction cycle is so rapid that IPOs, VC, private equity, none of these things work in the 2030s. So we're going through this profound period of change where first we're going to get this super acceleration of productivity, of asset prices, something we can really participate in, beyond which it becomes a very dark world I call the economic singularity, which I don't think of as a pessimist. I don't know what this means for us and how we're going to figure it out. So I kind of figure out we've got 5 or 6 years to unfuck our future, to solve the issue that we don't know what even the study of economics means in the future, what financial markets are, what assets are, what businesses are. So it's the period we need to really focus on wealth accumulation and to try and make as much money as possible. You'd rather go into this with your lifestyle covered, your future secure, and then we can figure out this complicated future. What I don't want to be doing is figuring it out while launching a new business in the early 2030s and everything has changed. So, it's kind of, we can see it ahead, like the steel mills in Sheffield in the UK or Pittsburgh in the US. We can see that these things are going to be closed down. We can see there's immense opportunity before it happens. So that is the ride we're on. And this is one of the key things for crypto that I try and tell everybody. It's like, I don't care whether you believe in, the libertarian angles. I don't care whether you believe that the technology is not for you. What you need to believe in is your future. And this is the only opportunity you're going to get to do that in this period of time.
Given the uncertain future shaped by AI and rapid technological advancement, Raoul emphasizes the urgency of accumulating wealth now. He advises building a secure financial foundation while the current system remains comprehensible and navigable. This proactive approach will provide the security and flexibility needed to adapt to the economic shifts of the 2030s and beyond.